All right, welcome everyone. I am absolutely thrilled you're joining me for this explainer today because we are diving into something really fascinating and honestly just a lot of fun. We're mapping out the physics of financial transformation, going all the way from basic fiat currency up to perpetual wealth strategies. And we're doing it using, of all things, Dragon Ball Z transformations. I know, right? Sounds a little crazy at first. But you'll see, the way the physics of monetary velocity, sovereignty, and yield actually map onto this 8-tier framework is, well, it's pretty mind-blowing. So let's just get right into it.
So what if your money could actually go Super Saiyan? I want you to imagine your purchasing power as raw energy, your financial key, if you will. In our traditional system, just standing still takes a ton of effort. You're constantly having to defend your energy from just draining away. But in this explainer, we're looking at 8 specific tiers of financial transformation. We're going to see exactly how you can level up your monetary energy to actually outpace the system.
Now, to understand why you even need to transform, we really have to look at the untransformed baseline, paper cash, or fiat. Michael Saylor actually hit the nail on the head here. He points out that if you're holding dollars, you're losing roughly 7% of your energy every single year, meaning the half-life of your money is just 10 years. It's literally a melting ice cube. And this fiat system, it really only gets stronger when it survives a massive crisis, like a bank panic, and terrified capital just flees back to it for safety. It's a setup where your raw energy is constantly bleeding out to inflation before you even try to power up.
Which brings us to Section 1, Base Form and Super Cash, how we actually escape that energy drain.
Think about the absolute sluggishness of base form fiat. It relies entirely on sovereign credibility, and it's controlled by Federal Reserve committees who make decisions behind closed doors. Contrast that with our first upgrade, Super Saiyan 1, which represents stablecoins. This is super cash. When you take fiat and throw it onto blockchain rails, you vastly upgrade its velocity. We're talking about money moving at the speed of light, 24/7, 365, with near-instant settlement. And it achieves this incredible power because the primary issuers are backing these coins with ultra-short-term T-bills. So they capture the yield at the institutional level while you get that raw, unadulterated speed.
And to put the sheer power of that velocity into perspective, stablecoin settlement volume hit a staggering $7.2 trillion in February alone. Trillion! The global market is adopting this Super Saiyan 1 upgrade insanely fast, purely because its speed absolutely obliterates the delayed Rube Goldberg-style back end of traditional banking.
All right, Section 2, Yield, Leverage, and Drain. Trading that speed for raw power.
When we level up again, it's fascinating to see how the financial stats essentially gamify our trade-offs. Bumping up to Super Saiyan 2 gives you a massive spike in yield, sure, but you're going to introduce some friction. Pushing further to Super Saiyan 3 maxes out your structural macro power, but the energy drain is severe. It literally depletes your stamina over time.
Let's break down that Super Saiyan 2 tier first. This is digital credit. We're looking at instruments like SATA, a daily dividend company paying around a 13% APR. Think of it as super-duper cash. You get a highly noticeable jump in raw power and continuous dividend flow, but you are bound by operational friction. You can't exactly swipe it instantly at the grocery store like a stablecoin, right? It requires secondary market order books and bid-ask spreads. So you gain superior leverage, absolutely, but you pay for it in transactional friction.
Then we hit Super Saiyan 3, and this perfectly mirrors long-duration sovereign treasuries, your 10-year and 30-year bonds. These things wield immense structural power. I mean, the 10-year treasury literally decides global mortgage rates, and the 30-year sets the baseline for multi-generational currency debasement. But just like the SSJ3 form rapidly drains a fighter's energy, holding long-duration debt drains your real purchasing power. You get trapped in duration risk, suffering through rate volatility and inflationary erosion over multi-decade horizons. You have immense macro power, yes, but you are slowly suffocating.
Next up, Section 3, Super Saiyan 4 Raw Thermodynamic Bitcoin.
Here we reach the absolute rawest form of monetary energy. Interestingly, Senator Elizabeth Warren characterized the nature of this network by noting that it isn't run by good people or bad people, it's run by no people. It's run by math. And math doesn't get greedy. It doesn't call an emergency meeting to ask for a bailout. It is completely autopoietic. It just governs itself, totally free from human intervention or closed-door loan committees.
This mathematical certainty is actually grounded in what astrophysicist Stephen Perrin describes as the power law. Bitcoin's growth is locked into a thermodynamic model with fundamental and harmonic behaviors. It operates on an angular frequency and absolute scarcity. It is quite literally stored energy. Some estimates place the network's stored work at an astounding 3,353 gigajoules. It's just a defined element of pure economic energy that completely ignores the chaos of the fiat system.
So the crucial takeaway here is that Super Saiyan 4 is raw spot Bitcoin, held in self-custodial cold storage. It's digital granite. When you hold your own keys completely off the grid, you achieve nuclear-level resilience and total sovereignty. But it's kind of like transforming into a primal-grade ape. It's wildly powerful, but way too raw to go buy a coffee with. Your day-to-day transactional velocity drops to near zero until you build an operational layer around it.
Moving on to Section 4, Mastering Divine Custody Models, how we actually harness that primal power.
To reach these divine tiers, you actually need external networks. You're effectively trading a fraction of that primal off-grid independence for ultimate enterprise security and market access. It becomes a delicate balancing act between pure sovereignty and pure security.
Super Saiyan God represents institutional custody. Think places like Fidelity or Coinbase. You are tapping into divine market access and immense security. But you're relying on external trust frameworks. You don't hold the keys yourself. And this is exactly what we're seeing play out at the sovereign level right now. The US government holds roughly 207,189 Bitcoin. They're officially establishing a strategic Bitcoin reserve, recognizing it as a strategic national asset, and harnessing this SSJ God tier through robust enterprise legal frameworks.
And then, you have Super Saiyan Blue. This is collaborative custody, like a 2 of 3 multi-sig vault through platforms like Swan or Uphold. This is all about mastering that divine energy through highly disciplined personal control. You get to leverage world-class institutional infrastructure to eliminate single points of failure, but you still retain your key authority. So you keep your connection to the grid without fully surrendering your sovereignty. Best of both worlds, really. Finally, Section 5, Ultra Instinct, Perpetual Wealth, the ultimate flow state.
Let's see how all of this builds into the perpetual collateralization engine of Ultra Instinct Wealth. It works in 4 incredibly precise steps. First, you convert your melting fiat into pristine collateral, like Bitcoin. Second, and this is key, you never ever sell it. That avoids tax drag and retains all your future upside. Third, you use that pristine asset as collateral to borrow fiat at low interest rates. And finally, fourth, you deploy that borrowed cash into higher-yielding assets or cash-flowing businesses.
When you project this out mathematically over, say, a 28-year horizon, the power of this flow state becomes undeniable. By continuously running this engine, never selling your core collateral, only harvesting the yield, and riding the thermodynamic growth of the base asset, your capital growth will continually outpace both your borrowing costs and the debasement of the fiat currency itself. You are essentially utilizing the absolute scarcity of the asset to permanently fund your real-world liquidity.
So, the ultimate question for you as an investor is simply this. Are you still bleeding your purchasing energy in base form fiat, just letting inflation drain your stamina day by day? Or are you ready to master the macroeconomic physics, level up your monetary transformation, and build your own thermodynamic wealth engine? Take some time to evaluate your own financial power level, because the tools to reach that perpetual flow state are already right here. Thank you so much for joining me for this explainer, and keep learning.